You're looking for the best way to scalp gold as efficiently as possible, and in this video I'm going to show you guys how you can scalp the 5-minute time frame when trading gold. Okay, one thing you need to know about gold is that it's not like a forex or currency pair that actually moves slowly, but gold is actually a very volatile pair. What I mean is that it moves fast and it also moves with a lot of pips. Now, for a commodity like gold, we need a strategy that can actually interpret the market faster than usual. As we said, this is a scalping strategy, so we have to go to the lower time frame, which is the 5-minute time frame. So let's go to the 5-minute time frame. So as you can see from the 5 minutes in gold, you could see how price actually goes in a consolidation at some point, then skyrocketing at some point, consolidation, skyrocketing, and this is actually happening over and over again. So from the quick glance of gold, we need a strategy that can actually fit this type of market movement. Okay, so from me looking at the market structure here, I know a very good strategy that can work with the market structure here. So the strategy we're going to be using on gold to scalp the market is the alligator strategy. So I'm going to show you how you can get this indicator, the settings, and how you can actually use this strategy to get entries and exits. And also I'm going to be showing you guys examples so you guys could understand it better. So what we're going to do right now is we're going to go to the indicator section. First off, you see trend, you see oscillators, you see volumes, you see Bill Williams. So Bill Williams is where this indicator is actually located. So after the first indicator in the Bill Williams, you can see the alligator. So let's tap into the alligator. So right now we're in the settings of the indicator, and what I want you to do right now is to go to the styles, and you see jaw, teeth and lips. So what you want to do right now is to make the jaws to be red. So let's make that to be red, and you want to make the teeth of the alligator to be blue. So once you're done with that, you can hit done. So when we're looking at gold, we're seeing points where the market was just consolidating and where price will automatically push up and where price will just stay stagnant. So we're going to add in another indicator that will help us figure that out. So what you want to do right now is that you want to still go back to that indicator section and just press the F button at this point. So what I want you to do now is to look for volumes. So to get volumes, first off you see trends, you see oscillators, and then you see volumes. So under the volumes indicator, look down, you see the actual volume we're using. So what I want you to do is that you have to tap that. So taking a look at the setting from the volume indicator, what I want you to do right now is that you have to make the pixels to be 2. But if you're still not able to see the indicator on the chart at 2 pixels, you can actually increase it to 3 or 4, but I think 2 will be okay for, yeah, just for everyone. So let's hit 2 and done. So if you're enjoying the video at this point, what I want you to do right now is to hit the like button for the YouTube algorithm so a lot of people can actually see the video. So if you're not yet subscribed and you want to get more video like this, you can actually hit that subscribe button and also to hit the notification bell so you can see videos like this whenever it comes out. So you might be saying to yourself, what is this indicator that I just uploaded on the chat? So right now what I'm going to do is that I'm going to explain everything step by step so you can understand what's happening in the markets. So the first indicator I'm going to explain on this list is the volumes indicator. You might be saying to yourself, what's the volumes indicator used for when trading gold? Okay, remember we said gold is actually a volatile pair, and now the volume indicator is what we use to track volatility in the market. Okay, so you could see a point, the market is consolidating all through, and you could see a point out of nowhere the market just started moving in a direction. The volume indicator will actually help you to track that. So let me use this point to explain what I mean. But right now I think the alligator is a bit disturbing, so let's delete that for a while, then we'll come to that later. Okay, this is the point we're actually focusing on. So at this point we are seeing the market is actually consolidating. It doesn't have enough movement, it doesn't have that room of a space to move and all that thing. So what I want you to do right now is to take a look at the volume indicator. So you can see this is a consolidation, and look at how the volume indicator goes scanty at this point here. So this is actually telling you that there is not a lot of volume in the market at this time, and thereby saving you the stress of not being in a consolidation in the market. So this is what the volume indicator does, and this is the point where the market was actually consolidating. So what happens to the point where the market was not consolidating? So at this point in the market, we're seeing a lot of momentum. Price is actually going in a downtrend, and what will the volume indicator actually interpret this to be? And we could see how high the volume indicator go here, trying to show you that there is a lot of market volatility in the market, and this will actually help you in knowing when to trade and when not to trade. So right here is another consolidation in the market, and we could see clearly that the market was moving sideways, and if you know the basics about forex, you don't need to be trading in a consolidation. So let's check out what the volume indicator is actually telling us at this point. So clearly from the volumes indicator, we could see that it was scanty at this point. This actually means that there is not a lot of market volatility, and at this point of the market, we're seeing bull run and market moving in a good direction where you can actually make money. And looking at the volumes indicator, we're seeing the volume indicator, so we could see that the volumes indicator was telling us that there's a lot of volatility at this point in the market. So right now I've explained the volume indicator. What about the alligator indicator? Remember, we named this the alligator strategy. So the alligator is actually the main focus. Let me show you guys how you can actually use the alligator in combination with the volume indicator to get entries when scalping gold. So let's go back to the indicator section and add in the alligator indicator. Settings are actually still kept in place, so we can hit done. So the basic explanation of the alligator indicator is these are actually three moving averages which have different period, but the main thing I want you to focus on is the green moving average and the red moving average. So the green moving average means you should take a buy in the market, and the red moving average means you should take a sell in the market. So what we need to focus on is the crossing over of these moving averages. So whenever you see the green moving average above the blue and the red moving average, this actually means a bull run. Whenever you see the red moving average above the blue and the green moving average, this actually means a bearish market. So right here is an example of a bull run in the market. So we could see clearly that the green moving average is above, and remember what we said, whenever the green moving average is above the blue and the red moving average, this actually means that the market is in a bull run. And also from my last video, I got a question saying, when do you know when you have to take exits in the market? So like this is an example of a bull run, and when you need to take out exits with the alligator indicator is whenever you see that change happening. So something like this is a clear example where the red moving average has already gone above the blue and the green moving average. So not just that, we could see this point in the market when the green moving average is above the blue and the red moving average. So this actually means at this point the alligator indicator is actually telling you to get into the market. Right from this point here, when we could see the price getting above the moving averages and the green moving average above, trying to tell you that the market is going in a buy. And right here we could see so long price was above the moving averages and the green moving average being above the blue and the red moving average, we're seeing that constant bullish momentum in the market. And remember, when we're expecting a change is when the red moving average is above the green and the blue moving average. So we've talked about on how to buy gold. So how about selling gold? Remember from what we said, we stated that whenever we see the green moving average above the blue and the red one, we're actually expecting a buy in the market. So in this case, we're talking about sales. We have to expect the opposite. So at this point in the market, you can see the red moving average is above the blue and the green moving average. And now whenever the red moving average is above the blue and the green moving average, we are actually expecting a sell in the market. And there you could see it, how price continued down, 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 and right there you could see at this point the green moving average go above the red and the blue moving average. And not just that, we were able to find out that the alligator indicator was acting as a resistance to show you price action. Whenever you see the mouth of the alligator closed in the market, this actually signifies that the market is in a consolidation. But whenever you see the mouth of the indicator wide open, this actually shows you that there's a movement in the market, and not just that, there is a lot of pips to be made in the market. So what we're going to do right now is that we're going to combine both the volume indicator and the alligator indicator. So one thing you need to know is that both of these indicators actually say the same thing. Okay, you could see that the alligator indicator's mouth right here was closed, and we could see clearly from the volumes indicator telling you that there is not a lot of volatility in the market right now. If you did enjoy this video, don't forget to give it a thumbs up. As you're about to go, don't forget to subscribe to the channel if you haven't, and I'll see you guys in the next video.